Welcome to the Daily Update Podcast, where I'll go over the action in the market for Tuesday, November 18th, and we'll see how things look for Wednesday, November 19th. The S&P 500 closed lower for the second day this week, down 0.83% at 6617. The price action in Tuesday's session was very telling. The S&P 500 opened weak, briefly breached the psychologically important 6600 level, tested the S2 pivot near 6573, staged a modest intraday recovery back above 6600, only to face renewed selling pressure going into the close. Volume was slightly below average, which actually keeps this move in the orderly decline category for now. The S&P 500 remains below its 50-day moving averages. The short and intermediate term trends are negative, while the long-term trend remains positive. Moving over to NVIDIA's earnings. All eyes are on NVIDIA's earnings report, which will be released after the close on Wednesday. This is unquestionably the most important catalyst of the week. A strong beat and rise could spark a sharp gap higher and potentially arrest the current downside momentum. However, history reminds us to be cautious of the sell the news reactions. Even stellar reports have been followed by gap ups that were fully retraced within hours. Conversely, any hint of disappointment, whether on gross margins, forward guidance, or commentary, could trigger a reflexive gap lower. That said, many short-term oscillators are already at extreme oversold readings, suggesting the short-term momentum is negative. The outcome of the earnings release will ripple through the semiconductors, big cap tech, and ultimately the broader indexes into Thursday and possibly Friday. Moving over to sector rotation and breadth. Money continues to rotate out of the mega-cap growth areas as well as AI-related names and discretionary. Defensive areas, including healthcare, staples and utilities, and select value/energy areas are holding up relatively well. The equal weight S&P 500 has outperformed the cap-weighted index in recent sessions, confirming that the bulk of the damage remains concentrated in the largest growth stocks. On the technical side, the semiconductor complex, which includes the SMH ETF and the Dow Jones Semiconductor Index, has now dropped below their 50-day moving averages. Looking at sentiment, the VIX spiked above 24, and its RSI sits above 70 since the rise was really fast on Tuesday. The NASDAQ 100 bullish percent index has fallen to 30, which is extreme negative. There still remains a confirmed Hindenburg omen, though we're beginning to see very minor positive divergences and a handful of breadth measures. Sentiment is deeply pessimistic. The CNN Fear and Greed Index touched single digits at 9 intraday before closing at 12, well below the 25 level that's extreme negative. And the put-call ratios continue to climb, which is also negative. Looking at the economic calendar and rates. Tuesday's data saw initial jobless claims come in higher than expected at 232,000. Continuing claims are also rising. But factory orders and the housing market index offered small positives. The 10-year Treasury yield ended little change near 4.12%, and Fed fund futures continue to price roughly 50-50 odds for a December rate cut. On the positive side, the anchored weighted moving average for the S&P 500 is holding for now at 6617. If we see a bounce, we'll want to watch overhead resistance around 6650. Seasonality for November 19th is mildly negative, and we are going through options expiration week, which can introduce additional volatility. In conclusion, the short and intermediate term trends are negative, momentum is continuing to build to the downside, but an array of oversold readings and early breadth improvements suggest dip buyers may be lurking in the background. Much will hinge on the reaction to NVIDIA's earnings. Thank you very much, and I will talk to you in the next podcast.